Okay, so we will begin very shortly. All right, we're gonna go. So what I decided was today we're gonna talk about some things. Um, Hopefully everybody can tune in and then we can start looking at stuff. There's already questions here. We can do a bit of Q&A, but what I decided was we talk about a bit of trading, go through how to build a plan, because obviously there's some issues here. Talk about the session that we're currently in, go through some analysis, talk about support and resistance, and talk about identifying zones. So anyone asking me about a pair, we'll get to that shortly, but let's go through some questions not related to trading. So what I mean by that is I don't want to talk about analysis. I want to talk about other things. Building a plan, talking about, there's a question here about being anxious around news, stuff like that. So what I'm going to do is I'm going to go through some of these questions, answer some of them, and then what I'm going to talk about is, once again, building out a plan and figuring out exactly what you need to do, but go into more specifics because I think that a lot of people aren't reading the documents that I've written and they're just going blindly. And if you're doing that, I feel bad for you, but if you aren't, maybe there's more clarification that's required, so I'm going to help out with that as well. All right, so those questions here. Hey Ted, I get nervous and anxious before the news starts. What is your thoughts on trading news? You just answered your own question. If you're anxious and nervous, don't trade the news. Okay, next question. I sweat when I scalp. Should I switch to swing trading? You answered your own question. If you're not comfortable, don't do it. What are the best pairs to trade as a beginner on a technical point of view? Any USD backed pairs, any pairs that have high volume, those are the ones that you want to start with. So that's the reason why people mainly trade USD backed pairs. You want to do that. In my webinars, I've always spoken and I've always said the same thing. Your best pairs are going to be the simplistic pairs, the ones that have the most volume, the ones that you'll see most often moving. It's even if you go into MT4 and you say, hey, what are the pairs that you're looking at? I mean, you can legitimately go into MT4 and look, you have your major pairs right there. So the broker's telling you something too. You have majors and minors, so you want to work with your major pairs. All right, so close that, close that, close that. Good morning. Yeah, all right. Okay, did that. Okay, I'm not going to answer analysis question yet. Let's just go through and see if we have any general questions. See, this is another issue that I have with a lot of people is you guys are so click heavy that you're wanting to click buttons, but you don't know why you're clicking buttons. You're not preparing yourself to execute. And this is why I'm doing this webinar this morning, is because I want you to slow down and realize the process, the follow through. If you see a lot of what I've written over the last 2 weeks, you'll see that, you know what, when we take trades, there's a mythology behind it. There's an idea behind what we're doing. Okay? So let's see, nobody's asking any questions. All right. Let's see. Hey Ted, are you okay? I'm always okay. I want you guys to succeed. That's why you're here, right? So I'm always okay. Don't worry about me. I want to make sure you guys are doing well. All right, so let's go into some analysis. So there was like 10 people asked for UJ analysis, okay? So first things first, when we look at UJ analysis, I'm going to open up a clean UJ. I'm not going to show you my UJ. I'm going to show you UJ that you guys would see. Okay, so I'm not going to show you anything of what my charts are. So over here, like these are my charts that I use daily. These ones over here. These are charts over here that I just opened for everybody. So we're going to go through and look at them really quick as we talk about it. So let's take a look holistically how my day starts, okay? So this is what we're looking at holistically, right? So we can say right now it is, if we drop into the 1 minute frame, we're at like 9:30 Eastern time. So the New York session's just opened. Okay, so this is the New York Stock Exchange. So once again, the NYSE. So currency USA opens at, let's see if I can get it here. Oh, I can't get it. But 15 GMT. This is when the US opens. So 15 GMT on my chart. So right now, this is the current time. So 16:32. So 16:30 in my world is 9:30 a.m. Okay? So wherever you are in the world right now, the New York Stock Exchange just opened. So NY, fucking stupid mouse, SE. Okay, this is the New York Stock Exchange. So when we talk about the New York Open for the stock exchange, this is the time we're talking about. Currency, this is the time we're talking about. These times are so critical to your trading, okay? And you're seeing it live right now, why those times are very critical. Because look at what's happening at those specific times, okay? You see a breakout right away at this time. Look what we're doing. We're moving. So you as a trader right now, this is the 1 minute frame, so it's a little exaggerated in terms of the movement, but you as a trader have to understand where the most benefit is to making trades. Look at the size of your candles. That's the first thing that you want to look at as you're trading. You want to take a look and you want to say to yourself, what makes the most sense? How are things working? And we can see clearly right here without even drawing anything. We have a channel. Okay, so I haven't even looked at this chart. Well, obviously I traded, but we're just talking and I'm looking at the chart and right away my eyes see that. So if you were just magically looking at the world and you decided to wake up this morning at, say you decided to wake up right over here, just before 9 o'clock. So you woke up at 8:50 a.m. Eastern time this morning and you saw this information on the 1 minute frame. You could take a buy position here, knowing very well that more than likely we're going to move up. Better yet, what you would do is you would take a look, you would clear out, and what you would do is you would drop into your bigger time frames. Okay? So this is the first thing that you're doing as a trader is you're figuring out your time frames. You're figuring out what your major time frames look like, sorry. And what you're looking at with UJ right now is we dropped, went up, dropped, went up, dropped, went up, dropped. Okay? If you can't see this just naked, looking at the charts, just like what I just did right now, if you couldn't see that and you couldn't figure that out, you need to take a step back and you need to start like bringing yourself into the charts every day and doing that. Because right away, what do I start doing? I can start drawing my lines out, okay? So right away, what am I looking for? I'm looking for a bottom, for a support, okay? I'm not looking for anything specific, but I'm looking for multiple touches, right? So multiple touches could be here, multiple touches could be here, but because I'm working on the daily, I'm looking for a little bit more specific things. What am I looking for mainly? Taps. I'm looking for taps. Taps where we tap and we reject. Tap and reject. Tap and reject. Tap and reject. Okay? Those are the things that you're looking for. Those are going to be your keys. Because what are we doing now? What are we building with those little keys? We're building zones, right? This is your swimming pool of liquidity, right? So everyone dived in there. They dived over here, okay? When we start to look and we start to turn around and say, okay, I want to draw a resistance level now. So I start coming down into my charts. I am conscious of these levels here. So everyone can say, yeah, there's a resistance level right here. Okay, great, right? Because we had a few taps, everything makes sense. But how does this help me putting a resistance level up here when I'm focused on this area over here? This does not help me. Putting a line over here does not help me analyze what's going on down here. You as a trader have to determine how you're going to trade. If you're swing trading, maybe you're jumping into the weekly time frame. If you're scalping, you're using the daily and the 4-hour. But you have to build your charts out so that they're relevant to you. Okay? I look at the daily because this is relevant to me. So when I turn around, and I'll erase all this, and I look at what I'm doing with this line, I'm looking now to get information on the daily, but I'm looking just relatively in the last week or so what's happened. So right away, what I can start to do is I start to see something. And the reason why I drew my line here is very specific. There's rejection. There's a bit of rejection. Okay, there's rejection. There's rejection. There's all these levels of rejection that I'm looking at, even new taps into that previous level. So when you start to go across and you start to see those rejections, you can start to see that this potentially could be a price level. But more importantly, what that gives me is it gives me information in this region here. Okay, so I'm working within this region right here. I don't have to worry about anything that's happened over here. I'm aware that we went down, up, down, but I don't have to worry about all this other stuff here. Okay, so I'm not looking at that to draw my support and resistance. What I'm looking at that point afterwards is now we have a rejection over here and we pushed up. Looking left, where do we see that happen again? Over here. So now I'm getting information. How many times has that happened? Looking left, we had rejection again. Looking left, okay, we had a bit of rejection over here. So we know that this level has some sort of influence on the market from a technical standpoint. That's what you're doing on the daily. You're trying to give yourself an estimation and say to yourself, hey, if I'm looking to see that the UJ is going bullish, where do I think we could potentially have problems? More than likely over here. Why? Because looking left, we see price levels. We see price levels. We see all these various levels that could potentially hit us. You, as a trader, your job is to say, okay, how is that going to affect my trades? And what am I doing to enter my trades so that I can be aware of these items, these price zones? So right away, we've mapped out what I would consider a daily zone, right? Now, when we go through this, and everyone says to me, well, Ted, how do I know when to take a trade? Right away, I'm looking at this price level. Sorry, I'm looking at what we have here is we have 110 to 108. So that's a huge range, right? That's a huge range. We can consider this a tap into liquidity, a push down, and then a pull up. So you can already start to see here, as we start to work on the daily, where we are tapping when we look left. So if you think of this as a box up top and a box up bottom, okay? Price comes down, taps into that little pool of water, pulls back up, right? Where most likely is it going to go? Probably to this level again. So it will tend to move up. When you get to this level, this is where you have to sit back and you have to use a judgment call. You have to say, are we going to continue moving up, or are we going to push back down into that price level again? So what you can see is exactly what's happened. We drop, tap into a price level, we reject, tap into a price level, reject, come back right into that same price level. If you notice right way, those wicks, they line up together. So if you turned around and you said, okay, I'm not going to trade this candle because I am unsure. There's a question mark here. I don't know what's happening because I only have one candle of confirmation to say we're going down. When we get to this point over here, you can make a judgment call and you can say to yourself, more than likely, we will come into this zone here and you will be able to push through and tap into this level. Okay? This is the daily. This is the clearest picture to see. Looking left, you can see right away that level makes sense because when we draw a line across, everything matches up. Okay? So let me do that a little bit cleaner. But every time you draw this line across, look what happens. It matches up to what's happened here. So you could technically say that we had a price level over here. We tapped, rejected, pushed all the way up, rejected this price level here, came all the way back down to this price level here. So if you were swing trading, and people ask me, well, Ted, I don't want to sit in front of the charts all day. I want to swing trade. How would you swing trade? You would then turn around. So I'll erase all this and get into the higher time frames. Get into my weekly time frames. Now suddenly you have more information. So what do we see here on the weekly time frame? Right? So once again, you can turn around and you can look across. The levels aren't as strong, but you can see here we have a rejection level. So when we start to draw it across, you can see clearly where we have that rejection level. This candle here tapped into this candle here. So we had rejection because here we had rejection and we went down, pulled all the way back up, flew through that zone. So you can say probably over here is a bit of a, oh, sorry, that's a bad fucking drawing. You could say right here is probably another zone. But more importantly, we look at this zone here. Why? There's a bigger wick. There's a bigger wick, and when you start to look left, look what's happening. You're hitting multiple price levels. More importantly, when we look further left, you have another big wick here. So we know as we go down, we tap that zone, and now we're pulling up. More than likely on a weekly time frame, I don't know how long this will take because if I did, I'd be a multi-billionaire. We will go to this zone here again. If we don't, we will be in this zone here and more than likely reject again. So this is something that you have to do as a trader. You have to evaluate your various price levels, but more importantly, you have to evaluate your time frames to make sure that you understand exactly what's happening and why it's happening. All right, so let's go through. Oh my gosh, there's thousands of questions. That's what happens when I talk and I don't look at the question box. All right, because it made a big move already, this is recorded. Hey Ted, I've been preparing for a sell position on UJ since yesterday. As soon as it took the market open and made my entry, but now it's doing weird stuff. Well, it's not doing weird stuff because we just explained why it's doing it. Can we cover something quick on risk management strategy? Example, balance is 1,000, you take a trade. What would be your lot size be? 0.01 or 0.1? All right. All right, I'm going through that right now. Okay, gold, we'll talk about that too. All right, if I trade on the hour 15 minute, how much should I acknowledge the weekly, for example? Okay, so we'll go through that. All right. All right, so let's do that. So a lot of these questions are basically people asking me what they should do with things, and it's just understanding risk management. Okay, so let's go through some more charts and do some analysis. Let's drop into the smaller time frames now because everyone seems to trade off the hour, which fine, you want to do that, great. But let's go into gold now, and we're going to trade off the hour. So here we are. So gold on the hour. So here's the thing with gold. Once again, gold itself is very, very violent. Okay, it's very, very fast, very, very hard. But what you have to do is once again map out your support and resistance. This is all you're doing. Is right away, I want to look to see where we are in the top. So makes sense, right? There's nothing to say that we're there. Now I want to see where we're going to the bottom. So now here's the guessing game. Where do we think we're going near the bottom? Okay, so I'm looking left, I'm looking at things, and I'm stopping here. Okay, so why am I stopping here? Subjective, right? I don't know if I should be stopping here or should I be stopping lower. Maybe I want to go to this point here. What I'm doing is I'm taking a look to see how many times we see taps in various areas. We can also say that, you can also move this up and say that this is a support level. Okay? But what I'm looking more important along with my support and my resistance is I'm looking at the various price levels. I'm looking here, I'm looking here, and I'm looking here. Okay, what that information is giving me is it's telling me if we're going further down, where could we possibly come to a stop? So when we go all the way across, we're coming into this price zone. So this price zone here, rather big, right? So as I draw this stupid box across, I should be using MT4 to draw it, but you can see how big that price zone is, okay? So we're tapping into it, but here we are at what I would consider a support level. Now, once again, it's not something that I know 100% because this is what I've drawn out, but as we start to go into our smaller time frames, this is where we get more information, okay? So you can start to see now how things are gonna work, and now when we say we have momentum now, because we were going down, and we have wicks, more than likely, those wicks will fill until we reach a support level, something that we see, right? Because here is a perfect example when we draw the 15-minute, if we looked at the 15-minute and we said, okay, right now we're at 9:52, so we wanted to trade the New York Open right here at 16:30. So I've mapped out my hour range. This is my hour range, okay? This is my range. So when I look, my range is 12:34 to 12:28, okay? So this is what I'm looking for. I'm saying to myself, based on my trading plan, based on my risk, based on my risk management, can I get enough pips out of these ranges, right? Whether I start up here or I start over here or I start over here, does that pip count, does that give me enough of a range? And what do I mean by that is, okay, so let's look very closely. Once again, as I talk about range, this is very, very important. This is something that maybe I made up. Maybe it makes sense in other worlds. Maybe someone else has talked about this, but this is something that I learned on my own because I started to realize that if I'm selling and support is here, more than likely it's going to reject. But if I'm selling over here, I have a range. I have about 24 pips that I can get potentially, but I don't need to get that entire range. Maybe I only want to get 10. So I don't have to worry about coming right to this level. And a lot of traders make that mistake. You guys turn around and you want to trade right to that mark. You want to start over here. You want to take your trade. You want to start selling over here with one candle confirm and say, hey, I'm going to go right to here. I'm going to get that whole move. Okay, so basically what you're saying to me is you're saying, Ted, I'm a genius. I'm going to get 60 pips out of this whole move because I'm going to call this top and I'm going to call this bottom. And I'm going to say, great, 60 pips, perfect. You know, you basically had no drawdown because you called the top and, you know, you got out exactly where it is because it shot through your support level and pulled back, you're fine. But what I'm saying is how many times out of 10 are you going to get that top and that bottom? That is trading. Trading is probability. Probability. Okay? Trading is all about probability. It is not exact. There is no exact line to say it's going to stop here, it's going to go here. You can see we tapped a little bit more here. We tapped a little bit more there. There is no exact science to this. So when you turn around and you try and tell me that I'm doing this to here to this and I'm doing this, I laugh at you because you are not focused on the process. You're focused on saying, well, since it went to here, it has to go to here, and then it has to go to here, and it has to go to here. So I'm just going to buy, sell, buy, sell, buy, sell. That is not what you're doing as a trader. You are looking for opportunity based on the market, based on the session that you're in, and based on how the market's moving. So let's look at gold right now in the US session, and let's break it down. So we have our support and resistance level that we drew out. I'm going to drop into shorter time frames. I'm going to give you information on shorter time frames now. Okay, so right now we're in the 1 minute frame. Okay, so when you start to go through, you start to see, what do we see overall in the patterns? Right? For the most part, you can start to see patterns and you can start to say to yourself, hey, looks like we've dropped. We're dropping. Okay? So if you're going to trade on the 1 minute frames, you can't come in now at 10 a.m. and say, okay, I'm going to try and get this little bit of support level. You've missed the move. You've missed the move. And this is what I tell people, is if you're going to trade the New York session, this is 1 hour candle, this is 2 hour candle, so this is 9 a.m., this is 8 a.m., this is 7 a.m. So this is 3 hours of movement. If you wake up at 10 a.m. because you want to just do stuff, you've missed this. Forget it. You're done. You can't trade this session anymore. And this is the biggest mistake you make as traders. Everyone's in at 11 a.m. Eastern, and they're looking at trades. They're saying, okay, well, I'm going to take buys here. I'm going to take sells here. There's a reason why people say no 9 to 5, right? 9 to 5 is a regular working day, not 11. Do you notice the difference? This is what I'm trying to instill in everybody is if you say no 9 to 5, great. You don't have to work 9 to 5. Maybe you work 9 to 9:05, right? You work 9 to 9:05. So when you start to look at your trading day and when you decide that you want to be a trader in the New York session like myself or anybody else, you have to commit to the session. This is your session, 7 a.m. Okay? You are up 7 a.m. Eastern. So what does that mean on my broker chart here right now? So take a look. In your head, count 3 hours back from right now, okay? Because right now we're at 10 a.m. Eastern. Count 3 hours back in your head, and I'm going to show you what 7 a.m. GMT looks on my broker. It might be different on your broker, but you right now are working with me live. You will know what 7 a.m. looks like. 7 a.m. So let's take a look at 7 a.m. 7 a.m. is right here. So this is 1410. So if I zoom in a bit, let me get this more exact. I'll take away this, take away that. 7 a.m. we are going here is 7 a.m. okay? So 7 a.m. is right here. Okay, this is 7 a.m. right now. So you can sit here all morning, you get your coffee or get your Red Bull or whatever you want, and you're going to watch the market at 7 a.m. If you're smart, you're going to wake up at 6:30 a.m. Watch the market, and then 7 a.m. But more importantly, what you start to see is you start to see patterns. And what you see is you see a lot of movement between those times. So you can map out your trades. So you can see we're going through a 1 minute chart right now in gold. you can start to see. If you said, I believe I'm calling the top on gold, and I'm going to sell gold, you could have sold it all the way down, right? Now, when you take a closer look, what do you start to see? The stops or the pullbacks are at specific times, right? So now we pulled back. Uh-oh, well, gold must be going up now, right? Because there's been a pullback. This is a 1-minute chart. This is not confirmation. This is just the larger candle setting up for later. Okay, so as you start to look through the charts, now you say to yourself, well, Ted, I was sleeping in, I didn't get up here, so I watched this till 7:30. Well, I'm gonna trade, and I'm gonna take a sell position because I'm looking at this as a retest and then a drop again. Good. Start at 7:30, take a sell position. But what did you forget to do? You forgot to check the news. So what are you doing now? You're pulling your news up and you're saying, oh shit, there is news at 8:30 and at 10:30. What do I have to be aware of here? Well, we have a red flag, we have an orange flag, and a red flag. PPI, crude oil inventories. So do I want to trade around 10:30? No. Do I want to trade around 8:30? No. So how do I avoid that? You trade before and you trade after. If you want to be smart, you take a look a little bit closer, and if you want to trade the news, you think to yourself, you sit at home and you open up Google. All right, so you go to Google. I'll give you the link for Google, google.com. Okay, so that's a key link. If you guys don't know google.com, here it is. I know a lot of people don't know this one, but this is google.com, so I always use this. Okay, so as we're going into google.com, what we are going to do is we're going to look at specific things. So I'm going to open up Google. I'm going to say, oh, Google, how is the USA economy? Oh shit, somebody's already asking. So I type that in, and here you go. You have all this information that you can sit and you can read. Okay, so you can read this one, you can read this one, you can read this one, and look what they are: CNN, CBS, Guardian, Focus Economics. Look at your current dates. This is October 4th, 2016, don't want. Maybe this one, May 5th. No, don't want. So what you turn around, you say, okay, that didn't help me. Ted, you're a liar. So I say to you, how is the U.S. economy doing right now? Here we go. So suddenly now we're getting a little bit closer to our information. August 29th, August 7th. Okay, so then you start to look through different things, and if you really want to get smart, you turn around and you look at the daily news that is available right now in the markets. So you take your CNBC and you're like, holy shit. Like what's going on? Havoc. How does that hurt the economy? What's this? What's this? Reading all these different items, how is this helping the economy? Do we know what's happening? How is the market reacting? This is probably an older I didn't refresh it yet, so let me refresh this. So you know what? You turn around, refresh it. Okay. So you can see Dow Jones Industrial, we're dropping 0.03. S&P, we've dropped. NASDAQ, we've dropped. The Russell 2K, we've dropped. This is the, what is that? That's, I think, the exploratory or the very entrepreneurial stuff. What is the fix? I forget what it, yeah, the volatility. So you have all this information here. Um, so when you look at this information, you take a look and you say to yourself, this stuff can help me because now we're looking and the market is going down a bit, not too much. Like, don't get me wrong, this is not a lot, but there's a bit of a sell-off. So is that really affecting the market currently in the currency market? We don't know. So when we start to go back and we look at the market, we could start to see we're at gold US dollar, okay? So when we zoom out a bit and we start to go through and we go jump over here, you can see the whole morning we've been trailing down, okay? So the stock market, even though the stock market opened a bit down, it wasn't enough to change the direction of the currencies. We're still having that drop. We broke our support that we drew out, and now we're still moving down. We're in the new hour. But what I'm saying is by you looking at this information and by you looking and engaging the economy, you can see what's happening all the way through as you start to read and as you start to understand. But this is what I'm doing every morning when I'm trading, is I'm going and I'm looking through everything and I'm saying what makes sense and what doesn't. From a technical standpoint, you can clearly see, even if you want to look very closely. So if we turn around and we zoom in, okay, so let's zoom in a little bit closer because we're on the 1 minute frames here. It's easier to explain sort of how things are happening every which way. So if you turn around and you look at the New York Open, look, market was down, gold goes up. Gold went up. There was a spike, right? You can look, that's where it spiked to. But then the overall trend, oh shit. Oh, for the love of fucking Christ. The overall trend continued, okay? So even if you turned around and you sold gold here and you're like, oh, it went up, you would have been in a drawdown for, I think, about 10 pips or so, right? Is that about it? Not even. So you'd have been drawdown for 3 pips and you want to go to your support level, you would have ended up getting about 19 pips out of that trade. And you would have been out, surprise, surprise, right before the 10 o'clock hour. You could have even dropped further down and taken that candle here. When it pulled back, you then still had move to continue further down. So even if you missed this pullback and you said to yourself, well, I still believe there's momentum, as soon as it tapped out over here, you still had the ability to do that. You're now at 10:06 a.m., another 8 minutes, you would have taken it. I would have taken my exit right here because it's right before the hour, but that's me. I look at these things as significant. I look at various hour pushes as significance. I know that towards the end of the hour that, even if we got over here, more than likely I would be closing at this position here because we've already broken support. We've tapped into this minor zone here on the 1 minute. Doesn't help me to give information, but I know that we tapped here. It's pretty strong. Maybe we'll pull back a bit and get out. If it goes further down, I don't really care. But this is what I'm doing. I'm looking at all this information, but I'm not starting to look at it right now. I'm doing this at 6:30, 7 a.m. in the morning. This is the time that you have to start when you start working in the US session this way. So you can start to see how things make sense if you get there ahead of time. All right, so people are saying there's flashing screen stuff. That's probably the webinar doing its thing, and it's also my screen probably too. But once again, this is what we're looking at when we look at these areas. So when you go now into the daily, so if we drop out and we go into the daily and we pull back out because we have our 2 lines, right? So we drew out 2 lines. You can see now where do we think we're going on the daily, right? And more importantly, when you look at gold, you can see we had a top of a major level, and here's a top of another major level. Okay, so for the most part, we tap that level and push down. When we get to here, there's the decision point. Are we going to continue up, or are we going to the next level? And then you say to yourself, what are next levels? With Gold, this could be a level. This could be your level. Okay? But keep in mind, we can't move 30, $30 every day. You can't do $30 moves every day with gold. It's not conducive to economies. And this is where I try and explain to people as well. When you look at trading and you're like, oh, gold's going to go from, like 1300, to like 1350, right? So, I mean, 1350. Like when you say that stuff, that's $50, okay? So that's $50 it has to move. Whatever, it's good enough. That can't happen in one day. You have to plan your trades accordingly. So that's why you get the wave. We go up and down, but we go up and down in increments. So suddenly now, that's where you get your trend. You're moving on higher highs and higher lows. You continue. You don't just go up. Oh, $50. Okay, we made it. It doesn't do that. So you have to expect these things. So as a trader, if you're looking and you're saying to yourself, okay, today is a bearish day, you know what? You ride the bear, right? You don't fight it. You don't say, well, it's got to go back up here. It's not doing that right now. Look at what's happening in the day. Trade what you see. So you have your eyes, right? So you put your eyes, you got your nose to breathe, and then you say, yay. And you got some teeth maybe. Maybe you don't have teeth and you're trading to get some teeth. But you say to yourself, I'm trading what I see today. And if I don't want to sell today because I don't like it, like today I didn't do anything, I come back tomorrow. It's okay. It's okay not to trade today. There will be lots of opportunities tomorrow. And if you want to trade Friday, you could trade Friday as well. But you have to be conscious of what the market is doing. What is the market doing? Always be aware of that. And if you're not able to see this information just by, if I turn around and if you can't see what's happening in this market right now just by looking at this chart, then you can't trade yet. You have to be able to see right now, naked, down, up, down. You have to be able to start giving yourself judgment calls. You have to be able to box information up and you have to say, okay, we're going to go up here, we're going to go to here, then we're going to go back up here. You have to give yourself a roadmap. You have to be able to understand that, hey, I hate this fucking pen. This part over here is probably a critical zone. This is a critical zone. This is a critical zone. Like you have to be able to start seeing these things right away with your eyes. You have to be able to look and say, hey, why did this happen? Always keep asking why and figuring out, hey, what was so critical about that? How did that work? Okay, what's happening over here? Oh shit, look, it happened again over here. Okay, good. So maybe this is going to continue. This is going to continue here. This is going to continue here. Like you have to be able to project what you think is going to happen based on what's going on currently in the market. You have to be able to put yourself in that. It doesn't matter what time frame you're on. You can be on the daily. Okay, if we turn around and we go to, the 5-minute chart, we have to look at the 5-minute chart and we have to say to ourselves, okay, what's happening in the 5-minute chart? What do I see right away in the 5-minute chart? This is what you have to do. Look left. Okay, first thing I see, all these little zones over here. So probably a big rejection point over here. But what do I see down over here? Probably coming over here. So what's going to happen? We'll do this, and then maybe we'll drop down further to here. But when is that going to happen? I don't know. What's the time? 10:15. Okay, we've done most of the move. The moves happen for most of the day already, slowing down. If you back test and you look, you can see the move slows down. And there's a bit of a move and it slows. Everything comes to a grinding halt and then it pulls back. So when you start to look at the charts and you start to look through and do the analysis, this is the information you have to start doing. You have to start saying to yourself, okay, it's 10:15. So why is this candle pulling back? Probably for the new 15-minute candle, right? So if we turn around and we exit, I guarantee you, if I look at the 1-minute chart, we're going to start to see a little bit of a move down. right away. See, you can see right away how things are happening, right? We looked at the 5-minute, it pulled back, and now the 1-minute chart's starting to pull down. Why? Because when we drop into the 15-minute candle, we're filling that wick, we have momentum. The key point here is, you know, you look, and once again, I'm calling this as I see it because this is what I see on a daily basis. I'm aware of this area here. Is this a major support level? I don't know. But will this wick get filled? We have momentum, more than likely. We don't know if it's major support, so we're cautious. But if I look, and I was trading the last 15-minute candles, you could see right here, we have momentum, we're pulling down. Wick filled, exit, done, right? Look at that. So if you look very closely right away at this, you had momentum, you had the information. I just told you exactly what happened. So when you look exactly at what's happening right now, look, wick filled, right? And how long did that take? If we go back now and we take a look at the 1-minute charts, look, you could see right away, this was the catalyst. Dropped down, pulled back, came back up, pulled down. So 1, 2, 3, 4 minutes, we had that movement. Why? Because we have momentum. Look at the time. We still have a little bit left in the session. So these are things that when you start trading and you get better at trading, you could start to see. Pull up, we had a wick fill. Pull up, wick fill. So you had momentum and we're still moving. You can see even here, we're going to push a little bit further as this 15-minute candle develops. So what do you say to yourself, Ted, is you say, okay, I'm going to look a little bit more. No, I'm not looking anymore. You know why I'm not looking anymore? Why? It's pretty easy to understand why I won't be looking for any more trades right now. Because when I look at calendar, remember what my calendar said earlier, what I was talking about? 10:30. We're almost at 10:17. That is a problem for me. I don't want to be in the market at this time. I don't know what's happening. So I've taken out, and it's also the reason why, if you look very closely, and we'll go back into the charts, if you look very closely, you can see right here and right here, people are all trying to get out of the market, right? You don't have this movement anymore. People are all trying to get out of the market because news is coming up. What are institutions doing? Setting up for the news. If oil inventories, wherever they're going, this will be your catalyst. But we don't care about that because we're looking for our range. We're looking to figure out what makes sense as we trade and how to get through it. All right. All right, so here's some questions. For example, people ask me, how do you trade daily if we're bearish on the daily time frame? Yeah, you can set your pending orders. That's exactly it. Why did Rag call buys? Because that's what he wanted to do. I mean, nobody would say like you follow each other's analysis. I mean, that's his choice. What time would you consider London close in Eastern time? It will be closing around 11 o'clock. All right, so I'm just going through these questions here. Yeah, but I mean, okay, so people are saying Rag called buys on gold. I don't care what he did. I'm trading according to my plan. I'm trading to what I'm seeing, right? You know, it's basically, you know, when you look at stuff like this, people give you an idea of what's happening. It's up to you to determine if it makes sense or, you know, what are we doing with regards to all that information. I mean, you can't say, well, because someone said buys, it's buys. You have to look at your own time frame, right? Is that 1 hour before the news release, the timeline you highlighted at the bottom? No, right away, we know we're going at 17:30. That's the oil inventory. What I'm saying is people are getting out before that time. All right. Do you think trading only New York session is enough? Well, I don't know. Do you think it's enough? Like, you have to determine what you want to do. Okay, so someone asked to you know, review Euro USD. Okay, so let's drop into Euro USD and let's go through all Euro USD. So here's Euro USD. Okay, so I don't trade Euro USD. I used to trade it, now I don't. So right away, let's take a look and see what's going on. Okay, so right away, I'm looking to see at my chart. What do I see right away? Okay, so things of interest to me right away. That's a thing of interest. These are things of interest. Right away, I see levels. In my mind, I'm looking at steps. This is a consolidation breakout, and then we had a pullback. So when you look at these things right away on the daily, you can see that this was a major zone, that there was information there to tell you that. Now, as we can see, gold is dropping, so that's giving you a little bit of confidence to say things are happening. But now if we drop into the 4-hour, we can see where we have issues. Okay, so what I mean by that is when I start to draw out my time frames, this would be a resistance level. I could almost argue that this would be a support level. The thing that bothers me the most right away that stands out is this. This is always going to give you a headache. And why? Because you can clearly see why it did. It pulled back. When you looked left, it tapped, pulled back out, right? Even though you had momentum, this huge price zone over here tapped you out and pushed you back up. When you look left, we tapped this price zone again, and then now we continued further. I don't know if it's news related. There's no news on the Euro USD right now, but you can see now as you look left, we're going through different price levels. So where's our next price level? More than likely, it's going to be in this area over here. Why? We had a rejection point here, pulled up. You can see all the various candles tapping that area. So that would be sort of my best guess to say that's where we're going to be going. So now when we go back and we look at our smaller time frames, let's dive in a little bit deeper, and we can see, okay, that's really bad. That's really bad. But you can clearly see as we go through, even in the 1-minute charts, all we've had is a clear drop the entire morning. There's been nothing to tell me here that there was anything happening. You could have even drawn out on the 15-minute charts. So let's go into 15-minute right now, 15-minute. We can go in the 15-minute and we can say, okay, if I want to draw more than likely, this is probably my price level, right? And then you can say, for hypothetical speaking, this would be my highest price level for 15 minutes. So I've drawn 2 resistance levels because I'm not too sure where we're moving through, but you can clearly see this was your catalyst. So when we pulled back, we were looking to fill that wick because these price levels are relatively here. But more importantly, as you start to look at your 15-minute frames, we're creating lower lows, right? There's nothing to say that we tapped. This candle here is just a tap into this liquidity here. There's no push to say that we're doing that. And as you start to see this final tap here, which matches up with this liquidity over here, we start to pull down, and then it's momentum. So here you could say, as soon as you saw this momentum in this candle, which was around 7 a.m., 7:30, you could say we're going to probably fill that wick, which we did. You could exit your trades because you look across, you have a price level right over here. If you wanted to continue, now you're just hunting price levels, and you're saying, okay, if I believe we're going to go further down, more than likely this is the zone we're going to go into. And you can see that we've tapped at that point. Every price zone, you can look left and you can see exactly why things have happened the way they've happened. So when you're trading, and this is a judgment call, this is what you do when you're doing judgment. If I'm trading and I'm saying to myself at this point, I'm taking a trade here and I don't know what pip gain you want. I want 10 pips. If I take a trade and I realize this is a support level and this support level breaks, I enter my trade over here. When I get through that price level, if we're moving down, you can see once I get to about 100 pips here, 10 pips here, when you go across, you can start to see where are we going to have issues. probably over here. So I probably would have exited at 90 pip, at basically 90 pips here. Well, basically 130 pips. Why? Because we have this price level right at this point. Even over here, looking here, you can see this in real time. So when you start to see candles form and push down, you can see that in real time to say, hey, when should I be exiting my trade? I'm looking at price zones. That doesn't necessarily mean that you have to have your take profit at that point. You could put your take profit down over here. But if you start to see things are getting a little wiry and like it's not making sense, close your trade. It's okay. You don't have to marry this take profit. This is here just in case you have a candle like that plows through it. It's not to say that it won't get there. Who knows? But what I'm saying is if you have a take profit point right here and you're watching your trade, suddenly a candle spikes through, you hit your take profit. But maybe you get over here and you're like, okay, I don't like the way that this is looking. We tapped into that price level, into liquidity, and maybe we're going to start to pull back a bit. That's okay as well. That's why if you open up 1, 2, maybe 3 positions, your third position, you put your stop loss above break even, and then you hit your take profit. That's okay. Like, don't marry your analysis in the sense that you need to get to this point. I don't do that. I give myself estimations of where I think the market's going to go. If it gets to that point, yay, I get a check mark. If it doesn't, I still took pips for the day. Don't marry analysis to the point where you get down to the point. If you're looking for 9 pips and you get 8, it's not a big deal. If you're looking for 10 pips and you get 9, it's not a big deal. Maybe it pulls all the way back the other way. Part of being a trader is being able to subjectively look at things and say, hey, that's not making sense to me. I want to exit my trade. Not, well, I'm going to let it hit my stop loss. You don't have to do that. Maybe you're right. Maybe you're wrong. It's okay. You have to really just focus on your own knowledge and also your own risk tolerance. All right. After a break is bound to retest price, correct? Not necessarily. It's depending on momentum. All right. If I wanted 700 pips and I was looking at the 192 area with the news, didn't go through, there was a spike and going to take, okay, so you want 700 pips. Okay, so if you want 700 pips, yeah, looking at the daily or looking at the longer time frame, yeah, so you basically had 3 hours of movement here. If you look, this is your 10 o'clock candle, this is your 9 o'clock candle, 8 o'clock. So, you could have written that down. Yeah, you would have hit the bottom of that candle almost. But once again, you're looking over here, you would have had a support level you would have had to probably break on the hour just by looking at where these candles are. So do you really want that much? That means that your risk is this much. So you're expecting your risk to be up here for a 1-to-1. So you're hoping that you're not going to go this high and you're going this far down. So then essentially your risk, you could probably aim for your lowest level because you have that momentum, but don't expect it to go all the way through because there might be a point where we pull back a bit to this price level here and then drop back further down. If you manage that, that's a good swing trade. I mean, there's nothing wrong with that. It's just basically taking what the market gives you at that point. If you're letting a trade breathe, would you let profit go into negative to catch a larger move, or would you use stops to profit and re-enter? What's your trading plan? Why are old price zones still valid? Shouldn't all orders be filled once it's broken? Well, no, it's not that I'm saying that they're valid. I'm saying that when you look left, there's probably a point where institutions will still take profit or enter at that point. There's always historical values that will help you in future values, right? So when you start to look through things and you start to say, hey, why is that old price value? Why are we over there? It's probably because when you look left, you see that. Okay. Can you show an example of liquidity wick and exhaustion wick and explain characteristics? All right, well, exhaustion and liquidity is basically just the difference in momentum, okay? So, we can even use this as an example. If you turn around and you say, okay, what would be an exhaustion wick? That would be your exhaustion wick. What would be a liquidity wick? That would be a liquidity wick. Why? It's very simple because when you look at this, you're looking here, but more importantly, you're looking at your momentum. We have downward momentum all the way through. There's nothing telling me here that we are, turning around and we're moving the other way. So this basically is an exhaustion to pull down. This is your liquidity to grab and then push further through. I mean, they're interchangeable in the way that we use them sometimes. You could say that, you know what, this is exhaustion, but we're going to fill this with liquidity. Or you could say this was a liquidity grab to pull up to start to move down, right? So you have to just look at where you are in momentum and say, this is what we're doing. Terminology, I mean, I hate to say it, I don't like it because it confuses people. I'm very simplistic in the way that I explain things because I just feel that I don't want to talk about hammer candle this, the hammer candle. Nobody talks about that. If you're in an institution, nobody's going to turn around and say, hey, this was a kangaroo tail and, we did this. Nobody cares about that. What they're looking at is they're looking at the price level. Where were we price level? How did that relate to over here? Things of that nature. You can see Euro USD is still pulling down. We had a bit of consolidation and we dropped. We look, why? New half-hour candle forming. Things of that nature. We know that we're probably going to pull back a bit and then drop further down. But if you turn around and you look back and we say, okay, Ted, show me more information. Look, you basically had this wick to be filled, this wick to be filled, and it was filled, right? Because we had momentum. We broke this support level over here. So when you turn around and you take a look across, and that was your support level, we broke it. We have some information here to say that we're dropping. So now what you say to yourself is, okay, well, where's our next point that we're going to be dropping to? I don't know, Ted, because I'm confused about what you're doing. Go into your higher time frames. You can already start to see that if we turn around and draw a simple support and resistance, you can see we're right on the cusp of a support level in the hour time frame. Why? Because when you turn around and you look left, you can see all this information here. So yes, can it break and go further down? Yes, but maybe we might have consolidation because once again, look at the time we are in the session. We're coming close to the London close. We're coming close to the mid-morning of the market. We've already taken so much out of the market. How much more can we take out of the day realistically? We filled this huge wick over there. So you have to plan accordingly and you have to say, okay, what makes sense at this point in time? Are we still going to continue down today? Maybe not. Maybe we just consolidate and we have a bit of a pullback until tomorrow to continue further down. So you as a trader, you have to determine what is my drawdown? What am I going to hold to get this further move? Or do I close today and do I come back tomorrow and see and reevaluate that move? Or if I'm already in the move, do I set my stop loss over here already in profit and then let it just do its thing? And if it hits here, I've taken my percentage and then it goes further down. We don't know fully what's going to happen. We can only use probability to dictate why things are happening the way they are happening. And if you start thinking in terms of probability and saying, what do we think is the probability of this happening based on the time of day that you're working on, based on the pair, based on historical information, how many times how big the candles are in the pair itself, that will help gauge your trades a lot better, and knowing that you have the range to take certain trades. All right, before the drop, what would be your indication to exit long? I was long at 1332 and aiming for 13.7. Okay, so let's take a look. Okay, I assume that's gold because I recognize the numbers. Oh, I have a Skype call. All right, give me a second here. All right, let's go back over to our forum. Actually, I'll just open mine. Okay, so there you go. That's my chart from this morning. Okay, so looking at the 4-hour time frame, There's your answer. These are my charts that I use every day. That's my answer. All right. Oh, all right, give me a second here. Let me pause this. I just have to answer this Skype call because it's important business. All right, so it broke out, then you got in on a retest for gold. No, I didn't trade today. Okay, so here's a question. What should you do to recover from a minor session, a minor loss during a session? Do you always give yourself time to readjust even if you see a setup shortly after? Well, what is your risk? Where are you in the risk tolerance in terms of your setup? And also, where do you, how many trades have you taken and where are you left in with regards to your risk? So if you're still within your risk tolerance, then yeah, take another trade if you see it. But the thing is, you don't want to overtrade. You always want to stay within your risk management. And if you're able to do that, then you're fine. Yeah, but okay, so these are questions that you're asking me. Like the question here is, so say you lose your first trade. Okay, you lose your first trade, but where were you in your overall risk management? Did you lose 1%, 3%, 5%? Those are questions you have to ask yourself. What makes sense? If you only lost 0.5%, yeah, and your risk management is to say to lose 3%, then okay, you still have 2.5% to play with. So yeah, you take another trade. You have to determine what your risk profile is to say, okay, I've lost 1% today. Do I want to take more or do I want to stop? That's a judgment call. That's not something that I can answer. It's something what you're comfortable with. If you see something that makes sense, you have to make sure you stay within your risk parameters. Yeah, so if you hit your daily risk, you just stop. Yeah, that's the simplest way to look at things. You hit your daily risk, you just stop. Okay. Does anybody else have any questions? I think we answered a lot here. I think we gave some information out. So once again, when you're building your plan, so let's talk about that. When you're building your plan, you figure out what session you want to work on, do your analysis, your support and resistance. We went through zones. Your plan is the pair that you want to trade, the time of day that you want to trade, your risk to reward ratio, all that information that you have to put down for your plan. I can't tell you when the best time is to trade. You need to know when the best time it is for you to trade. If you're trading a swing trade, you're looking at higher time frames. If you're doing scalping, you're looking at shorter time frames. But you're always aware of the overall bias, just to give yourself that added confluence. All right. I think with that being said, we will call it a day. So, well, there's questions. Thoughts for news on the pound? I don't follow the pound, so I don't know what the news would be. Ted, can you look at UJ because I lost early this week because UJ didn't wait for confirmation and I sold it. Yeah, okay, so let's look at UJ rather quickly. We can go. Yeah, so I mean you can look all the way through. If you look at this point, if you look at the daily, you can see there was at no point that we were selling. We had pulls all the way through. So this is your Wednesday candle, your Tuesday candle, your Monday candle. There was no reason to say that we were going to be selling at that point. The issue is when you look at your risk management, if you were to say, okay, fine, at this point over here, we were going to sell, or over here, you have to realize once you break this candle wick, you got to get out. Once you break these daily candle wicks, you have to get out. Like you can't hold yourself Here's an anomaly where we pulled all the way down because we hit a major resistance level, right? So this is the thing. You hit a major resistance level and then we pull back down a bit. But you know what? You have to manage your trade. If you turned around and took a swing trade as a sell, you have to be aware of these zones once we break this level. So as a swing trader, I'd be taking a pending or a sell stop over here or a sell stop over here because I want to catch the move as it's starting. I don't want to call a top or a bottom. Okay, so I'm not sure you mentioned it. What time would you suggest being awake for the London session? Well, I mean, maybe an hour before. Give yourself time to set up. So London session starts at 3 a.m. Eastern time. So at 2 a.m. Eastern, you're up. You're working on it. You know, it's your comfort level. It's what you want to do in terms of the way that you do your approach and how you want to see yourself in terms of trading. You want to give yourself the best opportunity, so you have to turn around and say, hey, you know, this makes sense or this doesn't make sense. I find that I wake up a half hour early. I'm okay to do that. So it's things of that nature. All right. All right, guys. Have a good day. Enjoy yourself. Hopefully this was informative for everybody, and I will put this in the drive. All the other mentors will have access to this as well. It's recorded, so as soon as they get it, we will be able to get. Okay.